Good evening for August the 4th, 2011. Just wanted to give a quick update on some of my insights into really what transpired today. I think everybody knows that the market really got hit today. Dow was down 512 points, something like 4.3%. The S&P, which I'll talk about here shortly, was down 60 points, which was down in percentage terms right about 4.8%. I must say right now in the futures market, the S&P 500 is trading up 1.75, which of course everybody's just kind of waiting for the big non-farm payroll numbers. That'll be out tomorrow morning, 7:30 Eastern Standard Time. So I would say all the traders, investors are pretty much on pins and needles as of right now. I must say a lot of technical damage was done today. My focus, however, is on the 1540 EMA, the exponential moving average, and that's what you are seeing in front of you. I made mention of this particular relationship here earlier in the week, and looking at the pattern that was unfolding. Of course, the 15-week EMA is gold, and the 40-week EMA is in blue. And what I wanted to convey earlier in the week is the pattern here between the relationship of the 15 and 40 that occurred back in the latter part of 2007 to really the relationship of that same pattern, i.e. the 15 in relation to the 40, what is currently going on here in 2011. And as I indicated, what I did want to convey is, wow, there's a similarity in patterns. And as I pointed out, we do know indeed what transpired as we went into the first part of 2008. So could it happen again? Of course it could happen again. But first of all, I just want to make mention 1 day or 8 days, or we've had now 9 out of 10 days of being a real downer for the market. We've given back over 10%. However, the 15 EMA is still above the 40, and from the strategy as such, that still indicates the primary trend is up. So I just want everybody to keep that in mind. Bulls, bad day. Bears, good day. And of course, I'm in the bearish camp, and I just find it very, very interesting. Just kind of listening to some of the commentators out there this entire day, especially after the market closed, and they were saying, "Oh no, what is going on? Just look at what's happening to everybody's 401ks. Look at what's happened to investment assets. Look what's happened to all these financial assets." And I just had to kind of chuckle. And the reason I'm saying I just kind of had to chuckle is because I'm of the opinion this entire market move here, coming off of the March '09 bottom on the S&P right here, which had an intraday print way back then at 666. In my opinion, once again, has been totally manipulated by the Fed. When you look across the board, there's been no improvement in the job situation. We have had no economic growth. We've had no improvement in business spending. It has been totally induced by the Federal Reserve System, by Mr. Bernanke. So what I'm saying, where were those commentators way back saying, why is the market going up? Well, no, nobody was asking that question. Now, of course, they're asking the question, wow, look what's happening to our 401k. Well, the question should have been, how come the market has gone up when we haven't had the economic activity? That's all for now. I just want to give you a short update, kind of give you my opinion of what's going on. Tomorrow, another day, and I'll probably be back tomorrow with another brief update after tomorrow's close. Have a good evening.